This week, the Calgary Real Estate Board has just released its 2024 forecast report. Now, this 26-page PDF file is a lot to digest. So what I've done is I've gone through the report, I've highlighted things that I want to touch on. So make sure to go along the chapters in the bottom of the video, find the places that you want to touch on, and let's get into it. My name's Adam Fyfe, your Calgary Realtor. If you're looking at getting into the housing market in 2024, now is the time to start to look at what's going on. There are multiple offer situations happening already in January, so 2024 is shaping up to be an absolute banger of a year. It is going to be very busy, so now is the time to start looking at what your plan will be when you decide to get into the market in Q2, Q3, doesn't matter. So, like always, the link is in the description. Feel free to reach out, ask some questions, or better yet, comment below and let me know what your thoughts are, because I do take the time and thoughtfully reply to all those comments. So, here's the table of contents. So we're going to basically chapter the video based off of this table of contents. We're not going to touch on the property types because I do that every single month, and we're not going to touch on the surrounding areas of the housing market. I will slide through some of the things at the end, but download the report for your own. So let's start this off. Let's look at the housing forecast summary. So there are a couple things here that I want to touch on. I'm going to read and then I'm going to respond. The decrease in new listings at lower price points has likely hindered overall sales activity, particularly as the lower priced properties contributed to the declines in sales during 2023. A little bit of a tongue twister, probably should slow down. Despite a moderation from record high sales levels, strong migration growth and a robust labor market have kept sales well above long-term trends. So this is more or less going to be geared towards the sales and the price points for the entire market. Moving into 2024, we anticipate that potential buyers who were previously on the sidelines due to limited supply choices may re-enter the market as lending rates ease and listings improve. So that's an interesting topic in itself. I would imagine that there's a lot of people that move to Calgary with 12-month leases as well. They come to the city, they rent for 12 months, and then they want to actually go ahead and make a purchase in the new year once they figure out where they want to live. So there's going to be a lot of demand on the buyer side. Looking ahead, 2024, migration is expected to slow but remain robust enough to sustain relative strong sales in our market. I would imagine that the migration is probably going to somewhat stay pace. Yes, it'll probably slow down a little bit, but for the most part, I would imagine that it's going to continue to grow and drive. However, given the persistent strong demand driven by recent migration and healthy job market, it will take time for supply levels to rise sufficiently to restore balance to the market. I've talked about this a few times. I would imagine at some point or another, in probably late 2025, early 2026, we're going to start to see more balanced conditions, just due to the fact that we're rezoning the entire city and we're pushing through regulations to try to create more supply faster. And we're going to touch on that in future slides. Where are we? Although conditions are not expected to be as tight as 2023, a seller's market is projected to persist throughout the spring market, resulting in further price growth. However, the rate of growth for each property type is anticipated to slow compared to 2023 levels. I would probably argue that. I would imagine 2024 is going to be absolutely busy. So I'm going to increase this here. So this is actually a really nice chart. It kind of showcases what the forecast is for 2024. And Calgary does this every year. They basically just replicate what happened the year before, and they basically say that's what the forecast is. So if you look at the actual sales of the different colors there, it's basically the exact same sales amount. And you can see that they are anticipating around an average 6% increase, which I think is fairly on par. I would imagine we're going to see higher than an average of 6%, but we'll talk about that in future slides, so skip ahead to the future chapters. So this is the economic summary, and I'm just going to touch on a few different things here. I'm not going to read the entire stuff. So, however, economic growth is expected to outperform most other provinces, primarily due to recent gains in the energy sector and population growth. Alberta's relatively strong growth is also being supported from gains in other industries, including technology, aviation, hydrogen, carbon capture and storage, and renewables. We are definitely going to outpace the entire country, absolutely. The province is expected to outperform most other countries, due to the resiliency of our energy sector. If there is a federal election and if there is a change in government, I would also imagine that our energy sector is going to absolutely explode, and we're going to go through the roof. Like, they're projecting the price of oil to go up by $1. I would imagine it's probably going to go up a lot higher than that. So it's a very conservative forecast, so we're going to kind of touch on that. It's interesting to see the GDP growth actually dropping. They're forecasting it's going to drop from 2.7 all the way down to 2.1. I don't know if I fully agree with that, but that's kind of the projections from the Calgary Real Estate Board and the economics, the people who do the economics. So fair play to them. What do we got? Forecast risks. So this is kind of interesting here. So there's environmental policies, and this is actually one of the bigger risks that I would agree with. Several announcements ranging from an emission cap on the energy sector to a net zero electricity grid by 2030 could have significant implications to our economy. While much of the details are still required and should be released this year, it does create some near-term uncertainty within the energy sector, which could impact investment activities. I mean, it is already greatly impacted investment activities. I mean, personally, I'm pretty happy with our Premier. I know that's controversial, but I'm pretty confident that our Premier is doing what she can to try and help our energy sector and push it along and getting that international investment and a lot of confidence back into our energy sector. So good on her. The new home sector has responded to the recent rise in migration, talking about housing supply and migration here. But ultimately, the level of construction will have to be more in line with the migration figures before we see substantial adjustments to supply. While there is available land for the development, municipal requirements could impact how long it would take to bring additional supply to the market. There's lots of bureaucracy. They're trying to do certain things and try to push their product. They're doing okay. I mean, we are seeing an increase in housing starts. Thank God. It was very, very bad in 2021, 2022, especially during the pandemic. But regardless, we're starting to see some increases, and we're going to talk about housing starts in future slides. Lending rates and inflation. So the elevated rates successfully reduced inflation to 3% by the close of 2023. Although inflation remains above target levels, many analysts and forecasters believe the current rates are overly restrictive. As a result, there's an expectation that the Bank of Canada might initiate a reduction in lending rates in the later part of the year. While rates are anticipated to decrease to 4% by the end of 2024, they will still be considerably higher than pre-pandemic levels. Like we were at ridiculously low interest rates for a very, very long time. The national rate here is a very good indicator of what kind of happened with the target rate. From 2010 all the way to 15, we're about 1%, dropped down to about 0.5%. Then we went up to almost 2%. Then we dropped down to basically zero for the pandemic, and then we absolutely shot up. Pretty wild stuff there. You can see that the bonds, actually the 5-year bond is a really good one to watch. You can see that that's actually dropped pretty dramatically over the last month or two. So we're starting to see a decrease there, which indicates that we could see some lending rates starting to fall. Over the last week here, they've started to tick up a little bit, but ever so slightly. The overnight targeted rate forecast, they're forecasting it to drop to about 4%. From what I've seen, I have been told and read and learned that there's probably going to drop down to about 3.5. I've heard all the way down to 3. I don't see that happening. So we'll see kind of where that goes in the middle of the year, and we will report on that when we do. Unemployment rate. This is something that I'm very interested in following. The employment sector sustained growth is expected to continue supporting housing activity in 2024. Although the rate of employment growth has decelerated in 2023 and anticipated to slow further in 2024, there is no substantial forecasted increase in unemployment or job loss. This outlook supports the expectation of continued stability in housing activity throughout 2024. It's kind of interesting. I would imagine there's so many people moving here and there's just not enough jobs right now to sustain that. So you can see that the employment growth forecasted is going to drop from 2.9% that we saw this year to 1.7% next year. The unemployment rate, again, super conservative. They're only expecting it to go up to 6.2%. I think it's probably going to go up higher than that just based off of the amount of people that moved here. You can see this graph here, which I'll blow up here in a moment, that the unemployment rate has relatively stayed flat all throughout 2023. We did see a great decrease from the pandemic, but we're kind of on the somewhat of the same playing field as what we saw in 2018 and 19. Obviously, we're a little bit lower by about 1.5%, 2%. So it's good to see it somewhat stabling out there. Moving along population. This is a very interesting one. This is actually a really cool infographic, if you would. So I'm going to read it up here. For 5 consecutive quarters, migration levels have surpassed 30,000 migrants per quarter, with Q3 2023 reporting an all-new record high of 56,000 migrants. While Alberta has never experienced this level of international migration, we are also seeing a surge in interprovincial migration. Alberta welcomed 45,000 interprovincial migrants from Q1 to Q3 of 2023, just shy of an annual record in 2006 for 46,000. So, this is pretty crazy. Alberta, that little blurb was about Alberta as a whole. We are seeing a lot of people moving here, and it's definitely putting a lot of stress on our housing market and our rental market, and it will start to tick up some of our unemployment rate. I also want to point out that it only goes from Q1 to Q3. Q4 numbers will probably come out like late February. There's usually about 2 to 3 months behind by the time they do all the statistics and whatnot. Recent estimations from Statistics Canada show that Calgary is accounting for nearly half of the population growth in the province and seeing its population grow faster than the provincial total. So clearly a lot more people are moving to Calgary than they are other cities in Alberta. Forecasters expect that in 2023, Calgary's population will grow nearly 5%, slowing to 4% growth in 2024. So despite the slower growth, expected population growth remains high and should continue to fuel strong housing demand throughout 2024. So they're anticipating that we're most likely going to slow down in the population growth, going to 3.6% from the 4.7% projected for all of 2023. So this is a very interesting little infographic at the bottom. We almost saw 100,000 international net migration. You know, we saw about 12,000 come from BC. We saw just about 20,000 come from Ontario. Again, this is Q1 to Q3. So it will be very interesting to see what happens when you get all of the year-to-date data in the next couple of months. So it would be kind of cool. We'll see that in the Q1 report, which I will record a video on. So let's continue on here. So housing supply in new homes and the impact that has on the rental market. So the sudden and sharp rise in international migration has played a significant role in driving up demand for rental properties. This surge in rental demands has led to a decrease in supply and substantial increase in rental rates since 2022. The heightened rents have also spurred demand in the resale market as both renters and investors actively pursue available resale properties. Most starts, talking about rentals, I do record a video every single month just talking about like the investment side of things. There's a lot of investors looking at Calgary, and this demand is definitely pushing up the rents. It doesn't talk about it in this report, but the vacancies in Calgary are like 2%. So it's a very, very low vacancy. It's very, very high rent compared to what we've seen, but at the same time, the higher lending costs and the increase in home prices have eaten away a lot of the margins of what a good investment property should look like. So shifting the gears to housing starts, most starts in Calgary have been in the apartment sector, with over half of the units targeted towards purpose-built rental units. So interesting stuff there. Calgary starts, I will continue to blow this chart up. You can see that we did exceed 2022, thank God. I remember looking at 2021 levels and 2022 levels, knowing that we are a little bit behind the curve. It's good to see that starts are continuing to tick up and set new records. Housing starts by type in Calgary, you can see that about 37% were detached, 54% were apartment rentals, 38% were detached, 32% were apartment. Out of the 32%, over 50% were apartment rentals, apologies. About 11% were semi-detached and about 20% were row. I wish they gave like some harder numbers. You can go over to the chart here and kind of cross-reference, but I'm not. The rental growth here is obviously pretty high as well. They are expecting an increase of another 10% year over year forecasted throughout the year. I can agree with that. I would imagine that we're going to see some pretty crazy rental increases. Calgary is going to very quickly get upwards of like top 15 most expensive cities to rent in Canada. Last month we ranked at 22nd. And we're going to continue to grow there for sure. 2023 housing market summary of Calgary. So new listings declined throughout the lower price ranges, contributing to a pullback in sales. Higher lending rates drove more demand towards affordable product while also preventing some homeowners from making changes in their existing housing conditions. This resulting in further inventory declines persistent seller market conditions and higher than expected price growth. Higher than expected price growth. If I could summarize this 2024 forecast, I would like to say that higher than expected price growth is probably what we're going to read in next year's follow-up for 2024. So just a quick recap, total residential. Sales were actually down. New listings were down. Inventory was down. Months of supply is down, and the benchmark price was up. So all of these contributed to a higher price point. You can see that the benchmark price increased by another 6%, and I would imagine in 2024, we're going to see another 6% growth. Sales and new listings, it's unfortunate to see new listings drop. I would like to see more supply onto the market. Inventory makes sense, and months of supply obviously makes sense of why it dropped. At least to me. If you have questions, reach out. So, no uncompensational shifts. This is kind of an interesting one. As we move into 2024, we are forecasting slower price growth for each property type in the city. Okay, slower price growth in each part of the city. Don't know how I feel about that. However, with less compensational shift impacts in the market expected in 2024, I botched that. However, with less compensational shift impacts in the market expected in 2024, total residential prices are expected to grow at a similar pace to last year, okay? So this is kind of neat. So we'll start from the right and we'll work our way left. So 2021, you can see that 61, almost 62% were detached sales, and 15% were apartments, were the two main. You can see that the 2022, about 53%, and then 21% apartments, and in 2023, only 46% and almost 29% apartments. So you can clearly see that shift towards more affordable product, and you can totally see that the apartment sector is eating up a lot of that. It's a bit unfortunate to see the townhouses somewhat fall from 2022, but there's going to be a lot of concentration on the townhouse market, I would imagine, in 2024. So this is kind of cool. Edmonton versus Calgary, right? This is actually quite mind-blowing to me. I kind of knew Edmonton was a little bit slower than Calgary. I didn't realize it was actually this bad. And for those of you who don't know, I actually lived in Edmonton for 2 years, so I have a little bit of experience in that city. Kind of reading through the report, in contrast, Edmonton began the year with higher supply levels that persisted throughout the spring market, preventing home prices from rebounding. On an annual basis, Edmonton saw a nearly 5% decrease in the benchmark price in 2023. Wild stuff. So when we hop over to the right here, Calgary saw a 6% increase, and then Calgary saw a 5% decrease, which is pretty insane. So you can see that the home prices in Edmonton are drastically less than Calgary. The sales were considerably less, over 12,000 less sales. Inventory, or the leftover homes at the end of the year, you can see that they had 44, Calgary only had 3. New listings greatly depressed as well. Sales to new listing ratio, we saw 80%, where Calgary or Edmonton only saw 62. Months of supply, we're in a very hot seller's market at 1.3. Edmonton is in actually a very nice balanced market. So realistically, about a 3-month months of supply, takes 3 months to kind of get rid of all the product. The pricing really shouldn't move too much at 3 months. I would imagine you're going to still see some price decreases just because it's a little bit more elevated over 3. But yeah, it's pretty mind-blowing to me, actually, to be fair, about Edmonton. Relative affordability. So relative is the key word here. Recent reports highlight a trend of easing prices in markets such as Toronto and Vancouver, signaling a shift in favor to the buyer. Conversely, in Calgary, home prices have been on the rise as conditions persistently favor the seller. Despite these recent gains in our market Despite these recent gains, our market remains relatively affordable compared to the country's 2 largest markets. I totally agree with that. I mean, at the end of the day, Calgary is still affordable. Affordability is quickly going out the window, in my personal opinion. But when you look at the relative affordability, it is a lot less than Toronto and Vancouver. I don't really like to just concentrate on Toronto and Vancouver. I like to look at the GVA and the GTA, like the Greater Toronto area, the Greater Vancouver area. Let's be honest, both of those cities are actually quite small and very condensed. Calgary is very spread out with less people. So it's interesting because it's really, you want to get the full picture of kind of what's happening in the Toronto area and the Vancouver area rather than just looking at the specific metropolitan, because we have way more detached homes in our metropolitan than both of them, really, at the end of the day. So not going to touch on this, okay? This is the detached market. I don't know how I'm going to chapter this, but I talk about these every single month. So if you want to know what's going on in the housing market, please go ahead and actually watch those monthly videos rather than me touching on this here. So this is the detached market. Pause the video, give it a read. A lot of this stuff is somewhat self-explanatory. Some of the very interesting things when you compare 2022 to 2023 on the bottom row here, the biggest highlight obviously is the benchmark price. We went from 627 to 675, massive increase there. Everything else is fairly self-explanatory. Again, the new listings is a little bit upsetting. I wish that we saw more new listings in 2023 because then we would have offset that huge price difference. Semi-detached homes, again, not going to touch on it. Watch my monthly market reports. Sales, new listings, inventory, again, benchmark price, such a massive increase of 7.4%. One of the things I would like to note, in 2022, they actually saw a huge increase in the benchmark price, about 12%. Now, obviously, we saw another massive increase of 8%, but we've seen a pretty gnarly trajectory for the semi-detached market. This is the townhouse market, and give me a sec here. The sales and new listings, the inventory, the benchmark price. So in the written report, it had this very conservative forecast that townhouses are only going to see like an 8% or 6% increase or something ridiculous. In 2022, they saw a 14% increase. In 2023, we saw almost a 14% increase. I would argue and I would put money down that in 2024, we're going to see another 13 to 14% increase in the townhouse market. It is ridiculously hot. There is a lot of unconditional offers going in on townhouses. I would imagine we're going to exceed $450,000, $460,000 for the benchmark price for townhouses. I'm calling it right now. The apartment sector is also going to see some massive increases. So sales and listings inventory, we saw a 9% increase in 2022. We saw a 13.5% increase in 2023. I would imagine same thing. I don't know why these forecast reports are so conservative. The condo market is super duper hot. I would imagine we're going to see another 12 to 13% increase in the condo market as well. We're probably going to get upwards of around 340, maybe 350, depending on how the year goes, but apartments are definitely going to see a lot of growth in 2023. So this is the surrounding areas. I do work in the surrounding areas, not very much. My bread and butter is obviously Calgary. I really like Cochrane. I don't mind Airdrie. I don't mind Chestermere. I don't mind Okotoks. Never really done much in High River or Strathmore, or Canmore for that matter. So pause the video, give this a watch. If you have any questions, you can reach out and ask. But again, I'm not really concentrated on these areas. So this is the forecast summary. This is kind of it in a nutshell. So when we zoom in here, we can see that the 2023 year-over-year numbers, and then in the purple, you can see the 2024 numbers. So let's just cut right to the chase. You can see that the total residential growth, they're estimating it around 6.5%. Pretty conservative. They can see that the detached price growth is going to increase by 4%. I would argue it's probably going to be higher, probably around 6 or 7. The semi-detached sales, the price growth around 5.5. Maybe I would probably argue a little bit higher. As I just alleviated to in the row house and the rows, they're way off. I would argue at least, and I could be totally wrong, but at the same time, I'm pretty confident. We're probably going to see about 14% increase in the row townhouse prices, and then we're probably going to see a 12 to 13% increase in the apartment prices as well. I don't know why they're so conservative. Like, the market is so hot. We are seeing multiple offer situations. I don't know why they want to do this and kind of protect themselves and maybe not build up too much crazy hype for 2024, but like, let's be real. Follow the channel. Subscribe to the monthly newsletters. Let's look at the market together every single month. I will be touching on this next year, and I'll look back on this and probably laugh, or they could be completely right and I could be completely wrong. Who knows? That's the glory of forecasting. So if you have any questions, if you're looking at getting into the market, the calendar link is in the description below. Go ahead and reach out. Where are we at? We're only about 20 minutes, so this video wasn't bad. It's not as long as my investment video. I smacked through that very quickly. My big synopsis of this entire thing is that they're very conservative on their forecasting. They were very conservative last year as well. They had very similar estimations where it was like kind of close to 2022, and clearly 2023 we absolutely smashed past higher than expected price growth. I would imagine it's going to be higher than expected price growth in 2024 when they're looking at this in 2025. So stay tuned, comment your questions below. I look forward to recording you videos every single month for 2024. Thank you very much for all the love and support. My name's Adam Fyfe. We'll see you on the next one. Peace.